Warren Buffett did a 3-hour, yes, you heard me right, 3-hour interview on CNBC here today on Squawk Box, okay? I just watched the entire thing, every single second of that baby. I did not watch it live, I recorded on Fubo, and I just watched the whole thing, okay? 3, in my opinion, scary things that happened in that interview in regards to what Warren Buffett was alluding to and whatnot that I think is very important. I've been watching this man's interviews for 15 years now, 15 flipping flapjacking years. So I can tell differences in his tonality, how he's approaching things, word choice, and I want to go over some of that I thought was very important. Then I also want to share with you one thing that I thought was a great lesson for all of us that are, or let's call it retail investors out there and investing money for ourselves that I thought was phenomenal the way he put this. And it's just, I think, going to help a lot of folks. We're also going to talk about CPI later on in this video. We're going to talk about some stocks making some insane moves, including a stock I used to own back in the day that actually just made a huge downward move, and it's kind of getting intriguing. A couple stocks I'm interested in buying here that are getting very interesting to buy levels. So yeah, we got a bunch to talk about. Busy video. Warren Buffett at the top. I appreciate everybody being here. Thanks for being subscribed, folks. I appreciate y'all. If you're looking to apply to join my private group, that's going to be the pinned comment down there, okay? So, Warren Buffett. Let's go over the 4 things first, okay, that were my big takeaways. And I might do reactions on the reaction channel to different parts of this interview, maybe tonight or tomorrow or over the next 48 hours. But this is the main 4 things I took away, okay? So first thing is, Becky Quick asked in several different ways. Basically Warren Buffett's opinion about how the Fed's doing, what the Fed should do next, should they stop raising rates, should they continue to raise rates, like what's going on, was the Fed too slow? And I just felt like Warren Buffett avoided these questions like the plague. And usually Warren Buffett's pretty good with being asked a direct question and giving a direct answer, but it just seemed like he really avoided it a lot. And a lot more than I've usually ever seen Buffett avoid questions before, which was strange to me. It just, like, she asked him indirectly, then she even asked him directly, and he just kind of like, I think kind of took a back seat and didn't really answer the question, especially in regards to, he's just like, I would just tell him to do whatever's in the best interest of America. And something else I thought was interesting? And maybe this was Warren Buffett talking in code a little bit, right? Because Warren Buffett can talk in code, as many leaders can talk in code sometimes. Something I heard was he mentioned Paul Volcker was a hero several times. I thought that was very telling. And so you could say, well, maybe he believes that Jerome Powell should, let's call it, keep rates elevated, or maybe even raise them more if he views somebody like a Paul Volcker as a hero, right? Kind of read through the, as I say, tea tree leaves there, right? That's interesting. He didn't say it once. I remember him saying it at least 2 or 3 times, mentioning that Paul Volcker was a hero in his eyes. Hero, okay? And we know Paul Volcker, the moves that man made in terms of raising interest rates to incredible levels. I mean, absolutely nuts. In terms of what Paul Volcker did, right? So that was interesting, okay? Second component, they did ask him about recession. Does he see recession on the horizon, okay? What Warren Buffett did say, he didn't answer it directly in terms of like, yes, absolutely we see a recession, or no, we don't see a recession. But basically, he kind of told us he's viewing a recession as a realistic possibility based upon what his companies are saying. And what he says his companies are saying is things are worse in many of the companies than they expected 6 months ago, okay? He even mentioned specifically about one of his retail businesses recently. Their retail sales are down 22% year over year, right? And I'm going to show you in just a moment kind of the retailers I think that he's mentioning there. But then it just goes to show you that there's definitely, this is a man that owns so many different businesses. If you don't know Berkshire Hathaway, they own an incredible amount of businesses, not just stocks, but I'm talking about whole companies, okay? 100% ownership stakes. And so this man has a view of the entire United States of America, even maybe a little bit on a worldwide basis, but in what's going on there, right? And so if we look at what companies Berkshire owns, there's 3 that could be a potential in terms of that 22% number down, right? One could be See's Candies. Probably not. I don't think small transactions like that have really been hurt. I think it's one of these 2 businesses that's likely the 22% down year over year. I think it's likely either Nebraska Furniture Mart or RC Willey. Both those are furniture companies, and put the pieces together, right? Think about it. Home sales, bad right now. Not a lot of people moving and not a lot of people doing bigger ticket purchase items like furniture and going out and spending, potentially thousands of dollars on new furniture. So if I had to guess, I would bet you that it's one of those two players that likely is having their numbers down 22% year over year. And if I had to guess, I think it's Nebraska Furniture Mart. Because think about it for a moment, right? Who's Warren Buffett more going to pay attention to? R.C. Willey? Not really, but he cares about Nebraska Furniture Mart in a huge way. From my understanding, Nebraska Furniture Mart, number one volume seller out there, right? So, who knows? Just my opinion on that. You could say maybe it's a diamond company like Ben Bridge, Hellsberg Diamonds. I don't know about that. People are still getting married. A lot of those events that had been postponed are still going on. So if I had to guess, furniture, okay? That's what I'm thinking in regards to that, right? Third thing that was scary is this man mentioned this several times. He said that Berkshire is built to be the last man standing, right? I think I spelled Berkshire wrong there. He said it several times. And he kept alluding, and I never really heard him describe Berkshire as last man standing, right? But it just kind of goes to show you that maybe he's thinking things could deteriorate in the economy, right? And he's built a company here that regardless can, get through any sort of situation. But also, I do think Warren Buffett's very aware that likely any Berkshire Hathaway shareholders are likely watching this interview, right? So I feel like he kind of talks in code a little bit to his shareholder base when he's describing things like we're built to be the last man standing to give the shareholder base confidence, right? But also it is kind of a scary commentary when you hear somebody like Warren Buffett continue to mention this over and over again. We're built to be the last man standing. Oh gosh. Okay, are you going to be the last man standing? Like, what are we talking about here? Okay. 3 scary things there. Okay. 4th thing, the CPI numbers came out during the interview. Warren Buffett heard all the CPI numbers. Okay. He heard it all. He knew the numbers, right? And Becky Quick wanted his reaction on it, right? Did he view him as good, bad, anything indifferent, right? And his reaction was kind of like, meh, wasn't that interested actually at all in regards to the CPI numbers and whether it was, 4.8%, 5%, 5.2%, anything like that. And we'll go over the numbers in just a minute. And he was basically bringing out a point that we never make decisions based upon these short-term numbers, right? We run the business exactly the same. Loom needs to fix their technology problems. That's all I got to say. Loom, guys got to get on this, okay? He said, we run this business exactly the same. We're not going to sell stocks or buy stocks or make differences in treasury purchases or anything like that based upon whatever the CPI numbers is, right? And this is a very similar view that I have of my portfolios that I learned from Buffett just watching this guy over the years is, you can't build something lasting and that you want to grow into something that hopefully becomes a huge thing over time by making short-term decisions, right? And I know every time I've ever made a shorter-term decision, it's always come back to bite me. If we look at the public account, right? An account $1.3 million or so, right? Down $24,000 today. I'm not going to make any judgments of this account, bad or good or anything like that, based upon the short-term CPI number. For all I know, the account could be up $50,000 tomorrow, right? It's completely meaningless on what's going on over the short term. I'm trying to build an account that is a lasting account that over the next 5, 10, 15, 20 years, I builds into a $5 million account, $10 million account, $15 million, $20 million, $25 million portfolio, right? That's what I'm trying to do with that public account over time. So I can't get caught up on all these short-term things, right? And in terms of your positioning, based upon whatever happens short term with numbers, just look at like a position like I have with Elf, right? A company I've owned for many, many years. And think about all the things this company's already gone through since I became a shareholder in 2019. From Rona, from super high inflation, from the Fed, from all the worries about geopolitical tensions, everything this company's had to go through, right? But at the end of the day, all that's just a short-term distraction. All the different CPI numbers, they're going to execute their business. They're going to do that as well as possible, right? You look at a company like I own, like Tesla, right? Can I make any judgment off of Tesla based upon what a short-term number is? I could. It's going to be a horrible decision for me. Horrible decision if I'm going to sell the stock or buy the stock based upon if the CPI came in today at 5 or 5.2 or 4.8. It's just absolutely ridiculous. Tesla's a lasting company that's going to build into a behemoth over this next 5, 10, 15 years, right? And I can't get caught up into the short-term stuff of all these things, right? It just doesn't make sense. And for a lot of you guys that might be watching this, that you're a parent, right? And I know there's a lot of people that aren't parents that are watching this video right now. But for a lot of the people that are parents, I think you're going to be able to relate to this, right? if you are a, let's call it not a very good parent, right? You're going to make a bunch of short-term decisions all the time for your kids, right? So if your kid is crying because they want candy, you just give them candy and just give them everything they want, right? And ultimately, it fixes a short-term problem. Your kid's not going to cry at that moment because you give them candy or soda or whatever it is, right? But you're creating a long-term problem because now your kids learned a behavior that all they have to do is complain and cry, kick up a big stink, and you're just going to bend over and give them whatever they want, right? And so it looks like it's something that helps short-term, but ultimately is a horrible long-term decision, right? And the same thing could be said for our portfolios, running our money, making our investment decisions. And this is what Warren Buffett will preach. You don't build these lasting things by making these short-term decisions. It's going to come back to bite you over the long term. It always does, okay? And you're going to end up in a much worse spot. And if you look to like the billionaire list, right, and you look to anybody that is super financially successful, all these people got there over a 10, 20, 30, 40-year span. They didn't magically just show up one day, and it was just they were ultimately, insanely successful or something like that. Anybody you respect did it over a long period of time, right? And they stay focused on the long term, not these short-term numbers and metrics. And none of these people are making any decisions tomorrow based upon whatever the CPI was today or wasn't today. That's the bottom line with it, right? Even somebody like Elon Musk, whose net worth has gone insane over the past number of years, right? A lot of people think like he was an overnight success or something, but people that are Elon Musk fans, about his history. You know that this man built X.com, which was then acquired by another company and then ended up getting into the PayPal family, right? And he was instrumental in creating that. I mean, think about the business. Customers were not assessed fees or overdraft penalties. In fact, they were rewarded for signing up for a $20 cash card and $10 card for new member referrals. These features were distinct for their time. For instance, customers could send money to another person by entering their email address into X.com. Additionally, customers could open an account strictly with online registration with no mail-in check situation, right? Which is incredible. I mean, that was so forward-looking for its time. I know nowadays we take all this stuff for granted, right? Because we have Venmo, we have PayPal, we have Cash App, and all these different services, right? And everything's so digital. But I can tell you, this was transformative in that day. Like, this was insane. Go back 20, 25 years ago. And so that man made a bunch of money off that X.com, right? And then obviously got into Tesla, SpaceX, and just kind of, built from there. But the man's been working on that for a long time. And so, as I say, Rome wasn't built overnight. This is a process, folks, okay? And so don't forget everything I just shared with you there. That's going to be super important for you for life, okay? Alrighty, next up here, the CPI numbers. And then we'll get to some stocks I'm looking at here and some big moves out there, stuff like that, okay? In regards to CPI numbers, number came in at 5. That's good. It's a little better than expected. Most people I saw were expecting 5.1, 5.2, somewhere in there. So to come in as, under expected, that's good news, okay? Bad news is if you take out food and energy, we're actually at a 5.6 number, okay? So then it's troubling. So we have good news in terms of the numbers getting better and better. The bad news is we're still high. Bottom line, 5% CPI is still too high. We need to be in the 2 to 3% range, okay? So which means we got more to go here, folks. We have more progress to make. We have not defeated inflation. We're starting to win the battle of inflation, but I can tell you we haven't won the war yet. We are winning a battle. We haven't won the war. This game still has to play out, folks, and it's not done yet, okay? Now, what this also tells me in regards to this numbers is I believe a Fed pause is incoming here, okay, based upon kind of what we're at now in regards to CPI. I think it's very probable we're going to have a Fed pause and the Fed's done raising rates now at this point in time. And I think there's a high probability they're going to start lowering rates if we get to a CPI in the 3s at some point this summer. And I think by late summer, it's a very realistic possibility, and kind of looking at the trends here and what I kind of see playing out, that we could be in the 3s at some point this summer. 4s is in the bag here sooner rather than later, but I think 3s is definitely a possibility. And if we get to the 3s, and let's say we're still at a Fed funds rate of 5%, there's definitely room for the Fed to start slowly lowering rates. They don't have to lower all the way down to 3%. They could just lower from, let's say, 5 down to 4.5, something like that, right? Or down to 4.25, somewhere in there. So that's definitely a possibility, in my opinion, of what's going to happen here as kind of time ticks on. So progress is being made. We're starting to win the battle, but I can tell you this game is not over, and we still got a ways to go here, okay? RH. So RH continue to pull back here, and something I love. Now, In regards to RH, very interested in purchasing and making a big position in RH if this one can continue to falter, and I'm hoping it does. And I see a scenario, so let's say we have a scenario where the S&P 500 pulls back 10 to 20% this summer, right? Let's say, the economy continues to get worse. Let's just say that's a hypothetical situation that happens. The Fed's still keeping rates up, and the Wall Street wants to put pressure on the Fed, which is all, I've always had a conspiracy, okay? Let me tell you about my conspiracy theory, okay? My conspiracy theory has always been Wall Street, big money, is going to put big pressure on the Federal Reserve to start lowering rates this summer. How do they do that? Tank stocks, report bad numbers, and the Fed will lower rates, and especially if CPI continues to come down, which is a realistic expectation, especially if you're expecting the economy to get worse. And so I've always had this little conspiracy theory of mine that Wall Street's going to force the Fed's hand to lowering rates at some point this summer, okay? And like I said, they do that by tanking the S&P 500 10 to 20%. And so if that's a scenario that plays out, right, and it might not play out, but let's say it's a scenario that plays out, then that's a double whammy hit for a company like RH. Because if that happens, this baby's going under $200 for sure if that's a scenario that plays out, if we're going to have a 10 to 20% pullback in the S&P 500. It may be even under $150 in that scenario, but also their business would get hit. Because remember who the clientele is of a company like RH, a lot of high net worth individuals. If the stock market gets hit heavily, I can tell you, there's a big pullback in furniture spending, new luxury home sales, luxury home sales have already fallen off a cliff over this past year. I wouldn't be surprised if it got worse if we saw a major pullback in the S&P 500. Then we'd likely see a bottoming of the business in likely early 2024, and then it's kind of up and away from there. So my hope is actually that scenario plays out there, because that would be a very attractive kind of buying opportunity for RH there, okay? Amazon. So Amazon stock continued to falter here today, trading at $97 a share. This is the main stock I am focused on buying in 2023. Last year, main focus Meta. This year, main focus Amazon, okay? And there's a tremendous opportunity this year. If you didn't know, Amazon stock is down over the past 4.5 years. You heard me right. Down over the past 4.5 years. Think about all the progress Amazon's made, everything they've done, in the past 4.5 years. Think about the revenue growth of this company, net income growth, everything they've been able to do, the build out of the business, right? And yet the stock price is down in 4.5 years. That's incredible, right? So 2023 is this amazing buying opportunity. Andy Jassy is going on CNBC tomorrow for a big interview. I think they're going to do either a 15 to 30 minute interview with Andy Jassy, I believe, tomorrow. So that should be interesting to hear what he has to say on kind of the future of Amazon and whatnot. But, you don't get opportunities in a company like Amazon very often to get it at multi-year lows, folks, okay? And so you've got to pounce, you've got to take advantage of those opportunities in these sorts of companies. And, I can tell you, Amazon's not going to stay at these ranges. Amazon's not going to be a stock that's stuck under $100 forever. That's all I can say about that, okay? They're going through a transition time. They're cutting a bunch of expenses in their business. All that's playing out. It hurts short-term profitability, but I can tell you I would expect strength in Amazon's business in the back half of this year as we move into future years. So, yeah, tremendous buying opportunity. I'm going to take advantage of every dip we get. Under 100 is where I really love buying the stock. But anything under 150, I'm buying the stock. But really under 100 is kind of the perfect scenario in regards to Amazon. Now, Cheesecake Factory, I was looking at this one over the past 4.5 years, down 37% in the past 4.5 years. And this is a stock that I think is a great buy if folks are looking for a dividend stock out there. Do some research on the Cheesecake Factory, and you're going to find that even during the great financial crisis, this company was able to stay very profitable and in a very good place. The numbers got hit very heavily in the past year. Inflation, it hurt them significantly. But I look at this one as kind of another one of those stocks in 2023 here that I'm looking to just continue to build out into hopefully a very large position in my dividend portfolio, and just kind of as a dividend stock in general in different portfolios. So tremendous opportunity there. And what's interesting is it's amazing how many stocks are down in the past 4.5 to 5 years. It's a long list. And I'm talking, these are famous companies, right? I just showed you Amazon. Everybody knows Amazon. I just showed you Cheesecake Factory. Anybody that lives in the United States of America certainly knows Cheesecake Factory. It's even, a name that's known outside of the United States of America, right? Disney, everybody knows Disney, right? And look at this stock. This stock's down in the past 4.5 years, if not 5 years here, right? And it just goes to show you we're going through basically a lost half decade right now, right? There's always the big fear about a lost decade with stocks. And we're basically going through at least a lost half decade in regards to so many of these companies. The list of extremely famous companies that are down in the past 5 years is a long list, folks. Now imagine a scenario for whatever reason, it might not happen, but let's just say the 10 to 20% drop in the S&P comes over the summer. Sell in May and go away and all that stuff, right? Oh my gosh. Can you imagine, like every stock, I don't want to say every stock, but I mean the list of stocks in a scenario like that are going to be down significantly on a 5-year basis is ridiculous, right? And so it just goes to show you how weak really the market's been in the last many years, okay? And so just understand that we haven't had an opportunity like this where you've been able to buy some of the best, most famous companies in the United States of America at 5 and 10-year lows since the great financial crisis. That's the last time we had a time period where you got an elongated time period to buy assets, stocks, at prices that they were at 5 or 10 years before that, right? Because in 08, 09, you got to buy some stocks that were, at similar prices as they were in 2004, 2003, 2000, right? We're talking 5 and 10-year lows. It seemed like almost every stock in the market during that period of time was at 5 or 10-year lows, and it certainly wasn't every stock, but it was a lot of them, right? And so understand, these sorts of time periods don't come around very often, folks. And that's why you have to work with urgency in this market, okay? And I was preaching this like crazy in the back half of last year in 2022, and I'm continuing to preach it this year. Work with urgency in the market. I can promise you, you don't just have these time periods where you can buy stocks at 5 and 10-year lows. And it's a long list of them, right? And you get a time period like that, and you have to take advantage. The ones that don't take advantage will be left behind, as they always are every single time. Cruisy doozy, Cirrus Logic stock down 12% plus here today. Cirrus Logic made me a fortune in the past, an absolute fortune. This was a great stock for me, did tremendous on this one, and very thankful for all the money I ever was able to make in Cirrus Logic over the years, okay? And it's one of those stocks I still keep an eye on. It's like, I don't say breaking up with an ex. That's kind of, it might be creepy to keep an eye on them over time, right? But it's certainly like, I view stocks as like dating, right? And so I break up with them, but the thing is, I might get together with them again. You never really know, right? And so Cirrus Logic, cruisy doozy, this is a stock I keep an eye on it. I keep an eye on it all the time, okay? And with cruisy doozy, stock down huge today, and the reason being is this company essentially has, Apple has decided, it sounds like, and all these are rumors, and, we'll see, but Apple has decided not to move forward with plans to switch the volume button and mute buttons on the side of the iPhone 15 Pro and Pro Max models to a solid-state design that will instead stick to the traditional buttons, okay? And so, if you have an iPhone, right, there's these little actual physical buttons that can go on the side of it, right? And what Apple was thinking about is basically removing these physical buttons and kind of putting basically kind of like a digital button there. Now, why this would have been huge news for Cirrus Logic is Cirrus Logic makes basically these little like amplifiers that could give you tactile feedback. So do you guys remember when Apple used to have the home button on the iPhone? This might have been iPhone 7, 8, 10. They used to have the home button, but you didn't actually press it in, right? It was just you put your finger there and it took the fingerprint, right? And in regards to that, it gave you like some tactile feedback. Well, this is the same exact thing basically Apple was thinking about doing. And Cirrus Logic, from my understanding, would have provided the little amps that would have went in there to give you that tactile feedback of like feeling what it's like to switch it off or on, because people like to actually feel that it's happening, right? And so, yeah, it's definitely a setback. If this is accurate, which is definitely a possibility, it's definitely a setback for Cirrus Logic. Now, the question is, does Apple ditch this idea completely, or do they continue with this idea and maybe it's just a year from now, let's say the iPhone 16 is the one that has this ability? If that's a situation, then yeah, it hurts Cirrus Logic's numbers over the next year, but at the end of the day, like they're going to benefit from that. And I think that's the big question, folks, is Apple ditching this whole, and so right now, I can't touch Cirrus Logic despite the stock coming down big today. If it falls low enough, let's say the $60 range, that's a different situation for me. $50 range, different situation for me. But even here in the high 80s, I can't touch the stock still because this is a big question mark of what's going to happen in regards to that, in regards to cruisy doozy there, okay? Alibaba shares tumble after SoftBank reportedly sells most its stake. Now, the question is, right, SoftBank's been taking some huge losses on a lot of different fronts. And by the way, SoftBank was getting kind of hit from different things even before Rona, which was interesting, right? And so the question you got to ask yourself is, did they want to sell Alibaba stock, or did they maybe have to sell Alibaba stock to make up for their deficiencies in kind of what they have going on at their business model? I don't know, okay? I don't want to say we'll never know the answer to that, but we certainly don't know the answer to that right now. So I thought that was kind of interesting. There's many different ways to look at it, right? Now, if you guys didn't hear about this, this is important. The Fed expects banking crisis to cause a recession, the minute show. Fallout from the U.S. banking crisis is likely to tilt the economy into recession later this year, according to Federal Reserve documents released Wednesday. Minutes from the March meeting of the Federal Open Market Committee included a presentation from staff members on the potential repercussions from the failure of Silicon Valley Bank and other turmoil in the finance sector that began in early March. Though Vice Chair of Supervision Michael Barr said the banking sector is sound and resilient, also given the assessment of the potential economic effects of the recent banking sector developments, the staff projection at the time of the March meeting included a mild recession starting later this year with recovery over the subsequent 2 years. Interesting, okay? So you got to ask yourself, right, when you read something like that, what is this a sign of? What is this a sign of, folks, okay? It's a sign of something very important. What is it? Cut. This is basically the Fed being very worried about recession coming and starting to become more confident about some sort of recession's coming. If they are confident about that, I can tell you a cut's coming. It's just a question of when does a cut come? Does a cut come this summer at some point? Does it come in the fall time, or does it come in the winter time? That's the only question of what season is it happening, summer, fall, or winter. But this basically tells me cuts are coming. And it's just, we got a few months that there's going to be a pause here, and then at some point in time, they're going to start cutting. Because when you start talking about fears of recession and the possibility of recession, that puts the Fed to, oh my gosh, we start to lose the employment sector, major jobs start to be lost, and next thing you know, cut. We got to fix the other mess we created, right? Okay, we defeated the inflation problem at that particular time, but then you got a new problem on your hands. The new problem is the economy, unemployment, people losing jobs at that particular time. Now, the one thing I'll say, okay, about all this is it's becoming more clear by the day of where we're headed and what's going on now, okay? And if we go back a year ago, I think it was a much cloudier picture. Inflation kept going up and up and up, right? Obviously, the Fed, no one really had a clue how far the Fed was going to go at that particular time, because when inflation just keeps going up and up and up, and the Fed was lagging as bad as they were, I mean, you really had no clue if the Fed was going to raise to 4, 5, 6, 7, 8. We didn't know, right? And also then, what are the ramifications of all those raises? What's it going to mean for the economy, for everything? And so I do not think we're necessarily in the clear yet, but the reason I chose this image here is because it's becoming more clear. We've still got clouds all around us that are confusing right now, but the picture is becoming more clear. And so I think that's good, and I think that's going to continue to happen over the next 6 to 12 months. And it doesn't mean we're out of the woods, or we're not going to have recession, or a mild recession, medium recession, bad recession, anything like that. It just means it's becoming more clear where we're headed. We're not in clear skies yet, but it's, there's some blue skies there that we can at least see and be like, okay, I see where we're headed now at this point in time, which I think is very, very important. Hope you guys enjoyed today's video. As always, I appreciate y'all. If you're looking to level up your investing game, apply for my private stock group, the private wealth group. That will be the pinned comment down there. Thanks for watching. Thanks for being subscribed, and have a great day.